And on Tuesday, the Monetary Policy Committee of the Central Bank decided to hold all the key rates constant amid the weak economic growth that has been recorded in the last 2 quarters following the recession. Briefing on the outcome, it was also an opportunity for the Governor of the Central Bank of Nigeria, Mr. Godwin Emefiele, to explain the adoption of the Nigerian Autonomous Foreign Exchange Rate methodology as its official window for exchange rate. And how are investment analysts interpreting these moves? Akintoye Oyelaku, investment analyst at Cordros Asset Management Limited, joins us next. This is Business Morning. Stay with us. All right, thank you for joining us, Akintoye. Good morning. We do appreciate your time. Good morning.
Morning. Thank you.
So let's start with the do-nothing decision by the MPC, where you guys at Cordros, one of those that expected that that they were not going to do anything, or you were one of those that thought there should be a hike?
Okay, thank you very much. So basically, before the release of the GDP, we had anticipated that if the country should witness a strong growth in the first quarter, the CBN will likely raise the policy rate, and tighten the key policy tools, given the fact that we had inflationary pressures. So this would be the ideal thing to do to cut the inflation number. However, once we saw the GDP performance was weak at 0.51%, we revised our view of what we anticipate what the market, what the MPC is going to do in terms of the decision. So we predicted that the MPC was going to maintain status quo, given the fact that we experienced a weak growth of 0.51%, and also we had inflationary pressures at hand. So tilting towards any of, trying to solve the problem of a weak growth or inflationary pressure would have resulted into negative consequences. So we believe that the decision of the MPC to maintain the policy rate at the current level is the best thing, so far that they are able to do, given the current realities.
All right, Akintoye, one major issue that came up at the briefing was the Forex market. Before that briefing, we saw the CBN, had adopted the NAFEX rate and the INE window as the official rate. And, let's listen to the explanation from the governor. Let's take a listen.
We found out that we were no longer dealing in this so-called CBN official rate. All transactions are benchmarked against the NAFEX. I had read in some places where some said, oh, it's because we had depreciated the currency or stuff and all that. And I came out and said, we did not depreciate the currency. The market, Nigeria still operates a managed float regime, where CBN will observe the market. As it deems fit, depending on its direction or where it thinks the market will be, will intervene in the market to control exchange rate in the market. That's what we're doing.
That was the CBN governor there. What's your take on that?
All right, so I think the adjustment of the official exchange rate to NAFEX is in line with general expectation. You recall that during the year, the IMF had advised the CBN to unify the exchange rate. Also, one of the conditions that the World Bank has placed for Nigeria before it can receive the $1.5 billion loan is for that the exchange rate should be unified. And we see that the CBN is moving in line with this. Whether or not it's a managed exchange rate, we have seen that naira lost value in terms of what it was before, as in the official window depreciated. If you compare the 379 naira to the dollar to the current 410 naira to the dollar, so it has depreciated from the previous value of 379. So whether or not it is referred to as devaluation, we see that naira is depreciated. Even if we can refer to that as just a managed exchange rate, it depreciated from the previous level, to reflect what the I&E market was doing.
Now, it's not just about the issue of the convergence, of the currency, but the availability of the foreign exchange there. And that has always been a major concern for businesses. So even with the so-called managed exchange rate, or whether you call it devaluation, and of course the fact that there's still illiquidity in the market. What are the implications?
Okay, so looking at the MPC's decision regarding the FX shortages that we currently have, most of the foreign investors have not really participated like, pre-pandemic level, given the fact that there is this view that naira is overvalued, and devaluing naira, or adjusting naira to an higher exchange rate will mean that the confidence of foreign investors will improve, and also given the current level of interest or yield environment, it seems to be an attractive market for foreign investors. So that's one of the reasons why the CBN cannot, the MPC could not make an expansionary policy by cutting down the policy rate, because this will actually affect the yield environment and it will lead to a negative sentiment for foreign investors. So as it is, maintaining status quo and with the devaluation of naira or adjustment of naira, if we can see more supply at the I&E window, we'll likely see more foreign investors participating, which means that the CBN will be able to defend the naira further.
All right, but going forward now, what is your outlook for the foreign exchange market for the rest of 2021?
All right, so I'm looking at the foreign exchange market. We all know that the oil sector is a major determinant for the foreign exchange availability in Nigeria. The oil contributes around 80% to Nigeria's export, and given the recovery we have seen in the oil market, crude oil prices have stayed around $65 to $70 per barrel of recent, and we're estimating that it will remain around $60 per barrel. So comparing it to what we experienced in 2020, we believe that the exchanges market will be, should be better than what we had in 2020. And we believe that with this development around the oil market, we are not likely going to see a significant depreciation in the short term, say within 2021. However, looking at the long run, due to concerns about global warming, we might see the oil markets remaining unstable. But for the remaining part of the year, we believe that naira should be relatively stable due to improvements in the oil market.
Now, talking about the value of the naira, for you guys at Codros, what do you see as a fair value for the naira?
So currently at the parallel market, naira is trading at around 490 to 500 naira to the dollar, while at the I&E window, we are saying around 410. So we believe that between this I&E exchange rate and the parallel market, we should see some kind of convergence. So if we can see improvement in dollar supply, naira should be within maybe an average of the parallel market and the I&E window. So between that, maybe like 460, 450, 460 naira to the dollar.
All right, the CBN completed the T-bill auction yesterday, and like what we've observed, the movement in the stop rate at the money market has dictated the tone in the fixed income market. What are we to expect, from the outcome of the auction?
Yeah, so basically, the money market has given the market a direction, especially in the fixed income market. We have seen that at the beginning of the year, despite the CBN maintaining the policy rate, changes in the stop rate at the money market shaped the market at the early part of 2021. We saw repricing following the sustained increase in the money market instrument. We saw repricing across the bond instrument. So looking at the recent trend that we are seeing, looking at the last auction compared to the previous auction, we saw that although the short and the medium stop rate remained relatively stable, at the long end, there was a marginal decline from 9.75% to 9.65%, which indicates that we are close to the peak of yields going upward, and we might not likely see a strong increase like we have seen at the beginning of the year to date. So what we will likely see more of now is that at the fixed income market, we'll see some kind of repricing at the short and the mid end of the treasury bills market, while we should also see repricing at the bonds market. So basically, that's what the impact should look like. This will mean that for the market, we are expecting to see more stability. Even though we still expect that yields will trend higher, we should not see that significant move.
Now, looking at the equities market, the upward trend in the fixed income instrument yield has resulted into more risk-off sentiment. Considering the current realities now, how should investors weight their exposures to the equities market?
Yeah, so basically, like we have pointed out at the beginning of the year, we're expected to see some volatility in the equities market, and we have advised that investors should look at weighting their portfolios with more fundamentally sound stocks. And given the recent performance of the market, we have seen that year-to-date, market has lost around 5% or 5.1% thereabout. Which means that some of these stocks have suffered a lot of sell-offs. So it creates room for investors to look at the market and look at instrument or securities that offer strong upside potential and high dividend yield, and also have strong fundamental features. Positioning in this instrument will prove to be very positive for investors, especially as we approach the earnings season for H1 2021.
All right, still talking about the equities market, it has posted a bearish performance so far, for this week as investors anticipated the outcome of the MPC meeting and the primary market options. Following the decision of the committee, what are you expecting, for the domestic bourse in the rest of the trading days, for this week and the upcoming week?
All right, so like you rightly pointed out, the investors were anticipating the decision of the MPC at the beginning part of the week. So we saw sell-offs, on Monday and Tuesday. On Wednesday, even after the completion of the MPC meeting, we saw that investors were still anticipating what the primary market auction was going to be for the treasury bills. So this also led to investors trading carefully, and market also extended the losses by 6 basis points. And what this means is that with the result of the auction and the MPC's decision, and with any season fast approaching, investors can now start to look at some of these stocks that have suffered significant sell-off, which have strong upside and expected to perform very well this year. So investors can start to take position in that. So we expect some cherry picking for the rest of the trading sessions for this week, and even in the subsequent week as we approach the earnings season, where companies will be releasing their financial performance for the half year of 2021.
All right, Akintoye, before we let you go, with the sustained recovery we have seen in the economy following the first quarter GDP release, what should Nigerians expect for the rest of 2021?
Yeah, so basically, we didn't expect much growth for the first quarter. However, for the second quarter, if you recall, in 2020, we saw a lot of COVID-19 restrictions in the second quarter, which resulted into sharp contraction in GDP. So currently, we have a weak base for 2021, and with economic reopening already present in the country, and most of the COVID-19 restrictions reduced, and the positive sentiment around the global space, we are anticipating that in the second quarter, Nigeria is going to report a sharp increase in growth. We are projecting a 3.37% GDP growth in the second quarter, while for full year 2021, we are expecting the economy to grow by 2.63% compared to the 1.92% contraction that we saw in 2020.
All right, thank you very much for your time, Akintoye. We do appreciate it, and enjoy the rest of the day.
Thank you.
After the break, commodities market update is next. Do stay with us.